Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys. Today I think that we could take a look at the Great British Pound again, because on the gold market we do not have any new information, really new. Mostly market shows reaction on either on some positive mood on the markets and back to life process, or it reacts on the news, on the headlines news, on tensions between the United States and China on different subjects. So this is the Hong Kong turmoil. This is the sanctions against some companies, possible imposed of the payment from the China due to the virus spreading and other stuff. That's why in recent week gold has spent in a really tight range with no impact on the higher time frames, and really the background news was not really very significant. On the Great British Pound in turn, there are some moments that is really important, and one of them will start next week. So currently, if you'll take a look at the background of the situation in the United Kingdom, the focus stands on the negotiations with the European Union on the free trade agreement and the exit from the European Union, the Brexit, with the agreement. And as everybody were busy with struggling against the virus, the half of the year is past. And now, European Union and the Great Britain has just 6 months ahead to come an agreement. Currently, no big shifts, no big achievement have been made on this journey. And this is really very tough time, because all other things stands in relation to this agreement. There are a lot of talks about the negative rates that Bank of England tried to deny, but as you know, the gilt interest rate futures shows dropping of the yield, and this market makes possible to see the negative rates and treat this possibility as very high. The futures on the Bank of England interest rate is also showing that some easing of the policy could happen within a few months. And as it probably was said in the forum, that if some topics has appeared among the investors, it's very difficult to destroy it. As Bank of England already has started about the negative interest rate, it is impossible to make markets forget about it. Although they have said that they do not let to appear this, don't let to come negative rates on the market. But as you understand, the negative rates has direct relation to the progress of the agreement of the Brexit. Second moment is, agreement will have significant impact on the economy, and how the United Kingdom will finish will exit from the pandemic results, pandemic consequences. It also depends on the agreement, whether it will be achieved or not. And the pace of the recovery also will be impacted by this agreement. So you can see agreement is really important. Next week, Great Britain will start the next round of the negotiations on this subject. And its market strongly hope that some achievement will be made before the summit of the European Union countries. It should start on 18 and 19 of the June, within the 2 weeks. That will be very important, because currently the sentiments that show that if no achievement will be made till the summit, United Kingdom will start preparation to hard Brexit by the end of the year. That will be a very negative moment. That in turn puts the shadow on all technical tools that we use here, because as you understand, Although maybe we will get the clear patterns, good setups for trading, but everything will depend currently on the news that we will get on the negotiations. The overall practice and progress and the statements of the officials on the agreement suggest that it's more probable to see the failure of any agreements and any achievements than some success. From that standpoint, the overall background stands bearish. It means two things. First of all, we could get at least deeper retracement, or the overall pattern could be erased totally. But for erasing of the pattern, it seems too early, because we still have time till the end of the year. This is weekly pattern. Well, it will be too significant impact with having the half of the year ahead to make some achievements to totally erase this upper direction and to drop. Hardly we will get it. Besides, we have the monthly reversal around 117 area. But some failure in the agreement, in the progress, in the negotiations, could trigger some downward continuation on the cable. That's what we'll keep an eye on. So currently for us, a major task to estimate whether this action is already the starting of the upward action based on this pattern, or we should get some deeper retracement first before upward action could start. Now we do not talk about the total failure. We still treat this pattern as a bullish and hope that will work, because it's too early to speak about the total failure. But the deeper retracement is possible. What we have? Well, in favor of the deeper retracement stands fundamental background that we just discussed. And take a look, actually, the deep retracement is normal when you have this kind of action. Because momentum that has been formed here still exists on the market and usually triggers deep retracement. That was what we said even 2 weeks ago when we started talking on the retracement. The market just starts forming this construction. And we said, well, that probably should be 50-60% retracement. Here we have the XOP is 119.90, it's 118.80, approximately 119 area is a potential target. If we'll get the deeper retracement, that could be larger type of the actions A, B, C, top, and OP. It approximately stands in the same area. In this case, 118.50, 119 areas will be the point where we consider possible taking the long position. That's approximately what we have on the daily chart. Now the question is with this action, what is it? Whether it's upward or just retracement in a downward action, and we should be prepared for another downward leg. On the 4-hour time frame chart, overall action doesn't look like the real reversal because it is too slow and choppy. With the deep pullbacks here, it's not the way how usually market starts the second leg of the large ABC pattern. It should be some straightforward action here, something of that sort. Not have it right now. Besides, on the city leg, you have the slowdown. It's slower than the AB. That's not good for when you're suggesting some reversal. This is not a good sign. It mostly suggests that the OP point could show the reversal down and ending of the ABC action. Market right now stands in agreement resistance and forming the guardrail triple to sell. Everything stands well. This is bearish context on the 4-hour time frame chart. But the tricky moment stands with these grabbers. So take a look. The market here within 3 candles has formed 3 bullish grabbers in a row that suggest the upward action. What the upward action will be? This will be just wash and rinse of the previous top, it's minor spike, or the market will continue to the XOP. We do not know. Also, we do not know whether this definitely will happen. But this is the moment that makes overall trading plans very, a bit tricky, and this is the source of the risk of the current trading setup. Speaking on the daily chart, if market even will hit the XOP here, it will reach the highest ending target, it makes no impact on the daily picture. It just will mean that this leg will start up from here. As you can see, it's minor impact on the overall construction. So, it means that on Monday we have to estimate whether these grabbers will work and what will happen. Whether the upward action will happen or market starts downward action. To do this, we need to keep an eye on this hour chart. Take a look. On the overall background stands bearish because we stand at the agreement resistance on the 4-hour time frame chart. We have the fallen wedge pattern, it's also potentially bearish, and good, nicely looking bearish divergence with the MACD. Here's probably we have also bearish grabber, if I'm not missing something. Right, here we also have the bearish grapple, which is very good. But the story stands not around the grabber per se, but also take a look here. We have potential bearish head and shoulders pattern inside of this wedge consolidation. It means that we should keep an eye on the circle. If market will start dropping right from the circle without any attempt to go higher, that will tell that most probable head and shoulders will work, which means that most probable that the grabbers here will be erased and market definitely will start downward action. If somehow market starts upward action up from the circle, moving high to this border, it means that either action to the XOP could start, or at least some wash and rinse of the OP could happen. So that will be the warning sign for the bears. This is what we will keep an eye on Monday. So if you plan your trades on the Great British Pound, just keep in mind this moment. This could become very important. Initially, in general, bulls currently has no background for trading because we don't have any bullish stuff currently. For the bears, it is possible to consider taking the short position with the stops above the 618 resistance. Maybe based on this head and shoulders pressure. That's the first way to act. Second, you could wait when the head and shoulders starts to work, the breakout, the downside, raising of the grabbers, and then try and take positions on pullback. But in this case, you will get the worse entry price. You could combine both things. You could take the part of your position around the circle with the stops above the 4-hour time frame chart 618 level. If market starts dropping, you could add more when the grabbers will be erased, some downward action, some pullback maybe to add more to your position. In this case, average price will be also nice. So that's the moments that we will keep an eye on next week. But just to remind you that overall fundamental background on the cable stands bearish. And well, I suggest that advantage currently stands more in favor of downward continuation and deeper retracement on the daily chart rather than upward rally, if of course something unexpected will happen. So that's our view on the cable right now. Let's see what will happen because next week is promised to be very interesting for the cable.